Hey everybody, it is Mark Coe for the 22nd of January 2019. I know that sounds a little strange to me to be saying 2019, but we're in 2019. Wanted to point out one of the first call trades here so far of the or one of the first here opportunities wise in January. And again, this is in crude oil. So I want to look at the level we're focused off of. We're looking at this top zone, 53.5 up to 55. So we issued a sell trade last night at the futures open. So I'll just show you what that looked like. Designing the levels here off of bigger picture, and then executions are coming off of shorter time frames. And again, to show you where we're focused on that execution, that would have been just above 54. So that was at the open last night. So that gives us, so far, I don't know, we're 230, so we're just past the pit close here on a Tuesday. So sitting just above $1,100 gain right now in an open crude oil trade. And again, it was all designed off of bigger picture zone, which is what we're going to keep pointing out. And I was really thinking about it from the standpoint of what I'm delivering to the subscribers. And if you haven't taken the opportunity to check it out, just kind of describe to you what the focus becomes. The focus really becomes on that, 3 to 500 tick target, and can I keep delivering those targets? And I thought about it from the standpoint of there's so many options and there's so many variables. You could have somebody that says, well, deliver me that zone and I'll take my 20 ticks out of it. My best information, or let's say best passing on of analysis, is not going to necessarily be in the 10 to 20 tick range. But when you start to view it from a standpoint of consistent delivering of bigger 3 to 500 tick type targeted moves, then there's a lot of meat there to deal with, and the goals become, how do I transform from taking those shorter gains into making bigger picture where I can really start to utilize this stuff. And think about it, when you're looking bigger picture, I'll just use crude oil as an example. When you're looking bigger picture stuff and saying, I know I'm playing against wider zones. Well, wider zones in crude oil represented very, very big moves. You were looking at moves between 75 and 43. And you were able to capture the entire meat of it by staying focused in that direction. Now you're back up against, again, a more recent consolidation, so the focus becomes short side. So over 2019, in a real transformation year for a lot of you traders, you have to start to think about, how do I constantly put myself in that position to yield those profits that are there? It's not good enough to take 10 ticks out of a 500 tick move. You're not going to see that every day, but you will see plenty of 3 to 500 tick moves throughout a year. And if you can start to capitalize and start to understand, hey, how do I get 60, 70, 80% of that move on a more consistent basis, that's where life looks a lot different. We had a setup this year also in pound dollar. We had the ability to buy pounds at just above 127. So again, looking at big picture edges, 27 up to 32, that's the target for first leg of this pound trade. We've seen 130s, but we haven't seen closes above, so we're still in the midst of that. So still opportunity to continue to buy pounds. The bottom edges, the best edges are no longer sitting there, but there's still been an ability to buy pullbacks through the year. So hope you guys are having a good start to your year. Almost the end of January. It goes really quickly, and we'll continue to assess, but so far not a bad start to the year. Again, just intraday pricing here so far, we're looking up a little better than $1,200 on one contract here in crude. So all in all, pretty decent stuff for a Tuesday. So cheers, guys. Hope you have a good one.